Hello, we are just waiting a couple more minutes for more people to join, and we will be starting in 1-2 minutes time. Okay, so we can start. We're a couple of minutes also for more people to join. Welcome to this new webinar by Solarplaza related to our Nordics PV and storage session. Today we're going to be talking about Collocated BESS case study and market trends in the Nordics. Big disclaimer, there's going to be quite a lot of slides, so I hope you had your coffee and very interesting material. I'm going to tell you that in just a minute. So let's kick off today's webinar, which will be presented by Julien Cossé, who is the Chief Strategy Officer at Nord Pool, and we will follow the presentation by Clean Horizon. Just a quick mention about Solarplaza for those of you who are new to organization, already more than 20 years in the market, probably know us from our conferences all around the world, but we also do deliver up-to-date content on the solar and storage market. Some practical details regarding today's webinar. Let me see if I can just quickly move the slides here. If you have any questions, and we will be taking questions at the end, please use the question box. We will use the Q&A. And regarding technical issues, use the chat box and we'll make sure to solve them. So Q&A at the end, so stay sharp, focus, send in your questions. We'll take them in the end. And give us 1-2 days to send the presentations to your inbox via email, and you'll have them freshly delivered. As mentioned, we will kick off with a market overview by Julien Cossé from Nord Pool. Then we will have a very interesting case study on the Swedish BESS market, where Michael Salomon, President, and Pratik Ashwekar, who is the Senior Energy Storage Analyst at Clean Horizon, will explain the models and forecasts for a collocated versus a standalone battery in Sweden with several assumptions. So I think very interesting and up-to-date material. That said, I won't be taking too much of your time. I skipped, and I will leave now the stage to Julien, who will run us through the market overview of what's going on in Nordics, and then we'll move to Clean Horizon presentation. And as a reminder, send in your questions as we will have the Q&A at the end. Julien, the stage is yours.
Thanks a lot, Nicolas, for the introduction. It's today to guide you through the recent market trends in the Nordic electricity market. So I'm speaking as a Chief Strategy Officer of Nord Pool, and I will do two parts in my presentation: to give first a few words about Nord Pool and what we do, and second, to have an analytical analysis of the market trends that is happening currently in the Nordics. So basically, Nord Pool is a market operator. Nord Pool is a market operator. We provide trading and clearing services mainly on spot markets across Europe. So those are the countries in dark blue. More than 16 countries actually, and for 5 other countries which are here in green, we provide our technology to the local exchange. So for Iceland, Croatia, Romania, Bulgaria, and Georgia, the local exchange is using our technology. We also provide market data that is enabling, market participant and a broader data customers to have a look at volumes, prices, and what's happening on the market. And as of next year, we are going to launch a power derivative, so power futures in the Nordics. And we also provide courses through our Nord Pool Academy in order to help a broader audience to understand how market works. And basically, this is something we provide to more than 400 customers, among which renewables assets operators and also storage operators or their market access providers, because most of these operators are using either traders or aggregators in order to access the market and actually value their assets on the day-ahead and intraday markets. So the way we sit in the value chain of electricity, so currently we sit in the two columns in the middle. So the day-ahead market, which is an auction happening every day. This auction is providing for prices for the 20 hours of the following day. At the end of September, there will be a big change in Europe. This day-ahead market will be then quoted on a 15 minutes basis, which means that market participants will be able to actually send their orders based on 96 15 minutes slot instead of 24 hours as of today. We also operate a 24/7 continuous market for intraday, also based on 15 minutes, which is a continuous market that is completed with 3 auctions that are happening at 3 p.m., 10 p.m. and 10 a.m. And we are going, as of Q1 next year, to actually expand our offering together with our majority shareholder Euronext into the financial markets, which is the first column in this scheme, for which we will provide power futures contract for Nordics and Baltics. And finally, to complete the picture, you have the reserve markets, which are operated by the TSOs. So here we are talking about FCR, MFRR, AFRR markets, and for which we provide data on volumes and prices, but we are not having an active role in these markets. For those who would like to strengthen their understanding and knowledge on the market, we provide courses, and here you can see a few of our upcoming Nord Pool Academy trainings. So we're going to have a physical and financial power course on the 12th and 13th of November. We also have a deep dive course on flow-based market coupling that will happen in Stockholm on the 22nd of October. And we also provide on an e-learning basis our certified day-ahead trader course, and also we provide compliance and trade surveillance courses also on a e-learning basis. So if you want to know more about these courses, just have a look at the QR code and book your seat for the upcoming trainings. Finally, we provide data services to a variety of customers, both in what we call the data portal, which is the way that we provide data for human interactions. So it provides with historical data, downloadable data, and visualization. We also provide data in that market data API form. It's more for automated data processing. Our data offering is both accurate and real time. There is a comprehensive coverage, and also it's very user-friendly and customizable solutions. So when it comes to the price development in the Nordics, so what we can say from, let's say, January 2025 until quite recently, which means July, is that after the energy crisis, the prices are somehow normalizing. So with a clear seasonality patterns, which means that we have had higher prices in the winters. Those prices are easing a little bit with the summer coming, and they have been quite low in the Nordics. If you look at system price, for example, which is an index representative of all the Nordics, then it went from 60 euros per megawatt hour in January up to down to 19 euros per megawatt hour in June. And of course, there is a huge disparity between the zones. If you look at Denmark, for example, it's a bit on a higher end because it's also influenced by continental power prices. But of course, if you look at northern Norway, especially NO4 or northern Sweden, then prices remain really, really low. And we can see that there have been an upward trend between June and July 2025, mainly because of a lack of wind across Europe and a bit of a higher demand. But prices are still quite low compared to historical levels. What is actually more interesting to see is the number of negative prices. You know, this is a trend, everybody is talking about it. When we look at the negative prices that we had in 2025, we have had record numbers all over. So both in Nordic Baltics, but also in CWE plus Poland. The accumulated number of negative prices has been a record until July 2025 in the Nordics. And actually for CW and Poland, this record is already broken. Which means that already in 2025 so far, we have had more negative prices than in the whole of 2024. What is interesting is July is unexpected low, so which means that we have been seeing few occurrences of negative prices for the same reason than we have had the higher prices. So it means that a higher demand and less wind, and this has been seen. So basically, we have had less pressure from renewables when it comes to prices on the wholesale market. What is also interesting to see is a capture price, which is a price which is captured by a given asset or a given technology in a given marketplace. And if you look at the wind capture price, so what the price could be, captured by an average wind generator in the market, they have been following roughly the market prices, which means that they have been quite high in January, February, and then those prices have been going down since then. What you see here is, if you look at June prices especially, is that these prices are actually unsustainably low because of record number of negative prices that we've seen in June, the surplus of production that we have in the north of Europe, especially in SE1, SE2 to a certain level, and also a lack of cross-border capacity between the north and the south of Sweden and Norway, which means that the prices are, the surplus is kept actually in the north of Europe, and actually it has a downward pressure on the prices. Of course, we see a little bit of an uptake in July, but of course it's due to a lack of wind. So all in all, the revenue that is captured by wind power is probably not that great. When it comes to now looking at solar capture prices, the picture is also unsustainably low. When you look at the downward trends of what value could be captured by a PV plant. We had a peak that was fine in February 2025, but when you look at 10 euros per megawatt hour in SE3 or even 28 euros in Germany, we see that for the same reasons than for wind, this is really, really low and probably lower than the LCOEs of the assets. So basically, what we see is that both wind and solar are struggling from an economic standpoint in the Nordic at the moment. Of course, what is interesting to see, which is due to the volatility of the market, is to look at, on a day-ahead basis, at the difference between the maximum price and the minimum price across the 24 hours of the day-ahead auction. And here you can see that this is a spread that could theoretically be captured by a battery, buying low, selling high. And here we see three clear leagues You have the high spread league, which is, Germany, DK1, SE4 to a lesser extent, for which you have fundamentals which are dictated by continental Europe, and for which you have a high spread between the mean and the max, so basically higher than 100 euros. On quite the opposite side, you have the low spread league which is mainly coming from northern Norway, northern Sweden, and Finland to a lesser extent, for which you have very low price and also low volatility. And also a third league, which is a little bit in the middle, that is, moving between the two, which is more about Finland, NO1, NO2, for which you have spreads which are around 60 euros. Of course, you can see some shift. For example, Finland, due to a better availability of nuclear power plants, for example, Finland shifted from a high league to the middle league. And of course, it can tell you or give you an indication of what a battery could capture if this battery was traded on the day-ahead market, depending also on the cost to cycle and other opportunity cost and revenue stream. Same picture, but for intraday now. So we are looking at the maximum versus minus minimum price every day of the intraday continuous market. One thing interesting to comment is that the spreads are much higher than on day ahead, so 3 to 5 times higher, and they are above 100 euros per megawatt hour for all bidding zone. Of course, we need to consider that the intraday market is less liquid than day ahead, but we can also see two clear leagues here, one which is above 250 euros and another one which is below. And of course, we also have this more volatility because we have 15 minutes products which provide more opportunity to arbitrage. And of course, this is something that we can also discuss is with the introduction of 15 minutes for day ahead, will we see better or higher spreads between the maximum quarter of an hour and the minimum quarter of an hour? Or will the price develop the same way when this auction was happening on a 24 hours basis? So this is, of course, a question mark that we will see answered in a couple of weeks from now. Finally, imbalance prices. This is very high on the agenda at the Nordics at the moment. This is an example of what is happening in Finland in June and July 2025. You know that all the Nordics have introduced 15 minutes imbalance settlement. This has led to extreme prices in some cases. And basically, before the introduction of 15 minutes, we had somehow the day-ahead price and the imbalance price somehow correlated. But now we see much more spikes on both ways, both in the negative territory and the positive territory. And this high volatility of imbalance prices is, of course, an issue and a risk that is, for which all market participants are exposed, so all balance responsible. And of course, this risk can be maybe hedged with the intraday market on a financial basis, or with a better control of generation, which means that market participants could actually control their generation to fit their nomination profiles, or it could be also hedged through batteries, because batteries could help managing actively the injection of the electricity to match the transaction and the financial position that market participants have on the market. But imbalance prices have been quite a risk recently, and is also a risk going forward. As a matter of conclusion, and also to make the bridge with the presentation from Clean Horizon, we are experiencing challenging times for the renewable assets in the Nordics. Low capture price on the one hand, of course, grid constraints, sluggish demand. We may have also some issues of flexibility of the demand as well. And at the same time, we have increased and more volatile balancing costs following the launch of the 15-minute settlement in the Nordics. And of course, this creates a squeeze between the revenues that a renewable generator can get and actually the costs that they are and the risks that they are facing. And of course, this is a risk that is directly affecting renewables asset operators or their portfolio managers or their trader or their aggregator. But at the end of the day, it puts some squeeze in their margin. Of course, this situation is very worrying because it's not sustainable for many assets. So people need to change their mind to try to have a more portfolio approach, including active batteries management, which may be one of the solutions. And this is why the collocation of PV and batteries may be a smart solution, actually, because you are able, as a market participant, as asset operator, to actually both play with the physical constraints. So with one connection, you can have an active injection management. And at the same time, you can also have the financial leverage to benefit from various revenue streams that you have with a battery, with this sort of pancaking of revenues between day-ahead, intraday, and also the reserve markets that may complement actually the loss that you make on the production side. So for that, I think that's the end of my presentation. So thanks a lot for that, and happy to take any question at the end of the session.
Thanks, Julien. And I think indeed that's a very nice bridge, because you mentioned the aspect of collocated. So we will indeed jump to Clean Horizons presentation, where we are going to examine the return metrics, especially the IRR for a collocated versus standalone battery. In the Nordics, I see Michael's already there, so I will leave the stage, Michael, to you. Can remind, send in your questions. I see already some coming. Again, we will take them at the end of Michael and Pratik's presentation. So send them over, and Michael, the stage is yours.
Okay, thank you, Nicolas, and thank you, Julien, for the nice prop here. I'll try not to disappoint you and everyone who's like on that cliffhanger that you just set up for me. So nice to meet you all. My name is Michael Salomon. I am the president of Clean Horizon. I will be starting my discussion with probably 1 minute of propaganda, and then I will do kind of an overview of the current state of the battery market in the Nordics, and then Pratik will go into the case study and do some real results. And then, in case you're not dead yet, I will hammer down again with propaganda, because that's what I do. So, okay, just as a quick introduction for those that don't know us, Clean Horizon has been since 2009 a one-stop shop energy storage consultancy. We are based in France. We do have an office in France, where where most of us are located. We have a small outpost in Miami, as a matter of fact, where we handle our Americas business, and we're just opened up an office in Germany yesterday. And we have two, I would say, external professionals that work with us, one in Brazil on technical topics, and one in Israel, specifically for the Israeli market. And the additional thing that I can say about us is, if you keep in mind that we only work on storage, and in storage we're both a market and a technical advisor, I think you got what you need to understand from us. And this, right now I think we're a team of 35, 40 professionals, or this kind of company size. Okay, so what I'll do is I'll give a quick overview of the Nordic market, the BESS, the battery market for the Nordics. I'll talk about megawatts, and then I'll talk about money, and then I'll talk about money again, and again about money. Voilà. I guess that's our daily life in the storage space. So first of all, let's talk megawatts. For all intents and purposes, we'll consider the Nordics as those four countries: Sweden, Finland, Denmark, and Norway. What I'm showing here is essentially the amount of megawatts of BESS that is either currently operational or under construction, or that is announced. What we call announced means a project for which there is significant reason to believe that this project is going to materialize in the future, in the not so distant future. And that basically says that so far we do see some uptake in Denmark. We see nothing in Norway, and Sweden is the country that sort of is leading the charge for BESS deployments as of now, and probably in the coming years. hence the light blue bar, that's the highest. If you want to take a look at, which ones are the key players, here's the list of the key players we're seeing in the Nordics. It's not really the purpose of this webinar to go into detail about who's who, but basically you see immediately that a lot of them are, I would say, local IPPs or local developers. Some of them are international companies, international small companies, international large companies. You see companies from Switzerland, from France, from Germany. So I mean, we're talking about or for Spain, so we're talking about a market that has local investors and which also attracts foreign investors. So, I guess that's a green light, a green light. So now the first data I'd like to show is this one. It's going to be in twofold. And I want to talk about Sweden. First of all, I'd like to say that I'd like to explain what is on this graph, and then I'll make a deeper comment. So the first thing I want to say is, you may have heard a lot about this, BESS market cannibalization term. It's kind of a weird term, and it's a bit aggressive in a way. Like, there's no cannibals. I don't think anyone is eating anybody yet on this market. But what this means by that is batteries, in general, just forget about batteries and the Nordics and ancillary services for a minute. Just think about the storing of any commodity. Storing a commodity is something that gets you paid because you bank essentially on the fact that storing is difficult, and then often that there's a price difference between two times. Like there's a buy low, sell high, you know, um, approach you can have to this. And as you can imagine, the more you start storing, the more you start putting storage on the commodities market, the less the additional storage becomes necessary because the commodity is already being stored. So the more you store something, the more the price difference between the low price and high price disappears, and the more the availability payment for being able to store, which in storage in our space is the payment that you get per megawatt as opposed to the payment per megawatt hour. So the more the fact that you can deliver a capability to store has any value. So in any commodity, storage is a business that sort of destroys itself, right? If you're storing rice, if the price of rice is flat all year long, then you're not going to make any money. So at some point, the storage of rice makes sense because if you don't have that, you may, die of starvation. So it becomes more of a public service in the end. But in the beginning, as long as there's some price variation, it may make sense to store. So as you understand, going back to batteries and ancillary services, and hoping that for the majority of you, the acronyms on the bottom of that chart are known to you. The acronym that I put on the bottom of that chart are ancillary services. For those of you that don't know what an ancillary service is, let's just say it's reserve markets that are available to energy producers and consumers in every country, and especially in the Nordics. So what I'm showing here is, so each of those reserve markets has a certain megawatt size, because on those markets, essentially what you're paying the system operator is paying is the fact that someone could be there to respond if there was a need for energy up or energy down. And so there's a certain megawatt size for each of those ancillary services, for each of those reserve markets, which tend to be small. And as a matter of fact, when you compare, what I'm showing in blue on this graph is the ratio between two quantities. At the numerator, the amount of megawatt that's pre-qualified in the country, in Sweden, divided by, at the denominator, the size in megawatt of the given reserve. And as you can see, some of those markets are vastly oversaturated. So I'm not going to get a Slido poll because I think Pratik is going to do one later. But I think I'm just going to ask the question: if the market like FFR there is 700% saturated, meaning that there's 7 times more megawatts of storage pre-qualified in this country than the need for FFR. Do you think the price of FFR is high? You don't, because it is not high. And as a matter of fact, you can now look at, so those numbers, this blue chart that I'm showing is the amount of megawatt that was pre-qualified last month or like 6 weeks ago. And now you can compare it to the actual price of ancillary service in this country. So I put this as a yellow line. Please bear in mind, this is just a graphical artifact. There's no trend, right? There's just points between each markets. They're not related to one another. But what you want to look at is the fact that, yes, okay, when it's oversaturated, the price is low. And as a matter of fact, on some markets like FCRD, over 2 years, the price has decreased tenfold. And I'll get back to this in just a minute. So basically, what you're seeing on this graph immediately before you start doing any sophisticated fancy thing or whatnot is that FFR, FCRD, FCRN are probably things of the past. AFRR, as a matter of fact, I said this in a comment in my previous slide. Right now, it's not interesting to storage. The regulatory environment around AFRR doesn't function. It will become interesting when when Sweden joins the Picasso platform, essentially next year. But right now, what you're seeing as immediately superbly lucrative is the third ancillary service, MFR. Why? Because it's not yet saturated and the prices are superbly high. And you can actually see that because the pre-qualification of, you know, MFR, pre-qualification of batteries for MFR is actually slightly going through the roof. Now, that is just us looking only at market numbers, not doing any fancy math or any fancy sophistication. Now, if you take those market numbers and compute how much money should a storage have earned, that's something we do through a tool which we call the index, which basically takes, which basically takes the market prices for a given country and simulates how a battery operator would have dispatched that. As you can see in the past, when FCR was high, most of those the bars represent how much money is earned every month by per megawatt annualized, but whatever the units. So basically, it's the number, the amount of money that could have been earned this month by storage, by a megawatt of storage, multiplied by 12, so we can have a nice annualized value. In the past, those bars were blue, light blue, because that's FCRN. But as this market oversaturated and it's moving to MFR capacity reservation, as you could have inferred from the previous slide. And what you see now is that in Sweden, you're making every month 3, 4, 5, 6 times more than what you would need to get, above this red line. So you're getting 3, 4, 5, 6 times more that you would need to essentially get a 15% IRR if this revenue was repeating itself every month for 15 years. Now, so I guess that's the overall, an overall overview. If you look at the Nordics in general, we're talking about markets where Sweden in particular, where storage is heavily penetrating and changing extremely fast how it makes money, because again, that's cannibalization issue that I mentioned for storage. Now, one thing that I want to mention is right here, I was just showing about the past, and Pratik, I'm going to give it a nice prop before he takes the lead in a minute. Pratik is going to talk about using the same trading simulator that I mentioned, but now applied to future data, because he's going to build business plans for storage assets that don't exist yet. And one thing I want to say is, if you're going to make a forward-looking statement, you're going to have to use a price forecast. Pratik, being part of my team, is very politely using the Clean Horizon price forecast, because you know what? We do them all across the Nordics. And it's very good that he does that. Why? Because of this graph. This graph shows you for the first 6 months of 2025, the first semester, it shows you, on the one hand, I'm using the same trading algorithm, we call it Cosmos. I'm using the same trading algorithm on the actual market data that really happened in the first semester of this year. And I'm using the same trading algorithm on the forecast that we had made last November for the first semester of 2025. And look at us. It's right on the money. It's actually even better. It's actually just below the money because you know what? This 2% is us being conservative. So bear in mind that he's going to make forward-looking statements based on our views for the revenues on the market for the next 10, 15, and plus years. Sure, yes, of course, we do not know, we cannot be 100% sure what will be the price in 2042. But if I look back at my recent history of forecasting prices, I don't feel too bad about it. All right, so now with me totally lacking humility, I will introduce you to Pratik, one of our senior analysts who has much better human quality than me, and we will be presenting more results specifically linked to BESS Collocation and Standalone in the Nordics. Pratik, the floor is yours.
All right. Thanks, Michael. It's always a challenge following you, but I'll try to do my best. So hello everyone, I'm Pratik and I'll be guiding us through the case study for today. And as we've seen in the Nordics, Sweden is the country which has the most interest. Our case study will be focusing on Sweden. And okay, let's set the stage a little bit for the case study. For those who may not know, in Sweden, the population is concentrated in the south, in zones SE3, SE4. There is obviously better solar resource in the south, but it's not just that. The revenue opportunity is also better in the south. And the reason is quite simple. Most of the generation is in the north, but most of the demand is in the south, and there are transmission constraints which cause these effects. On the left, we have a chart that compares the day-ahead prices, average day-ahead prices for 2025, and we can see that zones SE3, SE4 has average prices that are 4x higher than SE1, SE2. When we take a look at volatility in the market, which is more interesting for storage, the story continues. Since the transition to 15-minute MFRR, energy spreads are extremely interesting, and they are better in the south as well. So then what's the challenge in Sweden? So when it comes to solar, the main challenge, or one of the main challenges, has been that there have been a lot of negative price hours in the past, and nearly 750 hours or so in SE3 in 2024. And the year is not over yet, and we see that the trend seems to be continuing this year as well. And another problem that affects both solar and storage is that there is a lot of interest in development in the south. We have a chart on the right which talks about the interconnection requests. Huge interest in SE3 for both solar and storage. However, we know that the south zones have limited grid connection capacity. So the question is, can solar and storage work together and find a win-win solution? And that brings us to collocation. What are the pros? What are the cons? So the pros for collocation is that with the addition of storage, it opens up more avenues for generating revenues. So now you have access to ancillary services. You can benefit from volatility, basically generate revenues through arbitrage, and those can have very interesting price levels. When charging from PV, BESS does not need to incur grid fees, which is again can be a benefit. Um, Also, when you co-locate, you're going to be sharing the same grid connection and maybe also the HV transformer, for example. So you're sharing the costs. But all this comes at the cost of grid competition. So solar and storage will be competing for the same grid competition, and we'll see this effect shortly. And so we come to the question that we're trying to answer in our case study today. And we have a Slido poll that everyone can join, and we'll be curious to hear your opinion. And the question is simply, which type of a project do you expect to have a higher IRR? A new standalone BESS project, or a new BESS project that is co-located with an existing PV? And yeah, we'll take a look at these the results once we conclude the case study. And we already see, okay, co-location seems to be winning thus far. All right, we'll take a look at that later. A little bit more details on what exactly was modeled. So to keep it simple, we are modeling it at both the configurations at a transmission level. We are modeling both the systems to be connected at Danderyd SE3. This is relevant only from the point of view of grid fees. The standalone storage is 50 megawatt. 2-hour system has a 50 megawatt grid connection. COD is 2027 and has an 18-year life, assuming 1.5 cycles per day average. When it comes to co-location, so what we're trying to find is, is it interesting to add new storage to an existing PV? So the PV is already built, assumed to be already built and in operation. And we are trying in this case study to also find, just to be fair, the optimal ratio between PV and storage. So we are trying out 10, 20, 30, 40, 50 megawatts of BESS all at 2 hours, just to see the impact of the BESS PV ratio and the impact on the IRR. And after that, when it comes to CapEx, this is a very important assumption, just so that we can highlight the effect of co-location and not make the story about CapEx. We decided to keep the CapEx the same for all configurations. So standalone, 50 megawatt standalone, and the 5 different variations for the co-location. And these cost assumptions are marginal inputs that we've seen from the offers that we've analyzed on behalf of our clients in semester 2 2024 and S1 2025. And finally, we come to the result of the case study. What we are looking at here is a delta IRR. So the green line is the reference IRR for a standalone system, 50 megawatt standalone system. So what we're seeing let me say that again, it's a delta IRR. No one is making negative IRRs here. So a 10 megawatt co-located system is 6.2% worse than the IRR for the standalone system. And what we see here, some interesting dynamics as we increase the ratio of BESS to PV. There are better economies of scale in terms of the fixed costs. So you're sharing the same cost when it comes to BOP and DevEx and so on. But at the same time, that effect does not go on forever. When it comes to the 50 megawatt, we notice that there is the IRR is worse than that for 40 megawatt, and the reason is that at that point storage is competing with PV for the grid connection. And to round it off, we have a chart here just to explain the results in a bit more detail, showcasing the sources of energy charged by the BESS. And usually when you show a chart, what is interesting is what you see in the chart and not what you don't see. And what you don't see here is the conspicuous absence of PV. Or if you have really good eyes, you can probably see slivers of yellow in there. But the story is essentially that is almost always better for storage to charge from the reserve markets and the day ahead markets, because oftentimes the prices are lower or even negative than to be charging from PV. So yeah, so the main benefits, of course, are you benefit from the grid connection and the HV transformer, etc. But you don't really benefit from charging from PV. I will also just simply mention that the costs are sensitive to the results are sensitive to the cost. So if you play around with that, you may have a slightly different results. And with that, we are at the end of the case study, and I'll let Michael do the rest.
Okay, so thank you, Pratik. So I don't know if we have the results from the Slido, but now people have the response, so they cheat. Yeah, so essentially it's something that we've noticed on and on and no, see? No, see? So actually standalone BESS was more lucrative because of what Pratik showed, which is essentially the according to our forecast, the way we view the market, there's always more there's very little interest to charge from the PV because there's so many more opportunities on the market, and so that in the end you don't benefit from adding PV to the battery, and actually the two are competing to access the grid, and the PV sort of blocks the battery away from the grid. Okay, I don't know how I turn this off. How do I turn this off? I don't know how this works. I'm assuming it's going to go by itself. Yes. Nope. There you go. Okay. So just, and I know we have some questions, we'll try to take them right after this, but the essentially, what we have shown is two things. The first thing we've shown is, I guess the second thing we've shown, and which I'll start with, is basically the fact that what Pratik has done is just taken our forecast and run them through uh, our storage simulator, which we call Cosmos, which is basically designed to take any potential configuration for a storage project, take whatever price forward curves you give it to it, and then it's going to go ahead and simulate how a storage should be realistically traded. By realistically, I mean it's not an optimal dispatcher, like it's not a pure mathematical optimizer, it's this kind of stuff, no perfect foresight, but it's actually something that simulates what a decent trader would do, not the best, not the worst, decent trader, and which we use to either compute business cases like this one that are then bankable because they're conservative, or uh, um, uh, and we can also use to do I would say backcasting to compute how much money should have been earned last month, so that our clients can sort of compare with what the route to markets offered. So the second thing he showed was running Cosmos, and I have apparently my slide is stuck on the wrong page, but the first thing he did was actually inject into Cosmos. Oh, it's moving on its own. Beautiful. It's our vision for future price is our price forecasts, which are available as in those 14 or 15 countries in Europe. We will be deploying them in more countries in the coming month. I believe early in 2026 we will be adding UK, at least Great Britain and Netherlands, and potentially other markets in Central Europe. But so far, everything you saw came from the combination of two factors. First, using the price forecast in Sweden. In that case, I think Pratik used AC3, one of the 4 zones in Sweden, and running that through our Cosmos simulator to obtain, I guess, the results that he showed. So, that's about it for us. I understand we have questions, but we will try to get them. I don't know how to switch slides. It looks like it's a bit blocked. I don't know. Oh, there it is. Should you have any question, you can reach out to Pratik, or it's gone. You can reach out to Pratik or to myself at your disposal. And if you didn't have the time to write down our emails, always back on, you can find us online and send us like a note on the website, and we do respond to it. So I got 3 questions. Nicola, I don't know if
Yeah,
you should
here we
answer
go.
them, or so
We do
how's
have
that work?
a bit of questions. I mean, we could go, if you agree, because we have also some questions that are probably more related to Julien's presentation.
Okay.
If you agree, we can go in this way. We'll take 2 questions for Julien. Apologies up front to the audience if we can't take them all. Otherwise, we'll take probably 1 more hour. Let's maybe start first with those, let's say, market-related questions on the power market, and then we'll deep dive into the case study. So maybe, Julien, first a question for you relates to this 15-minute settlement which was created, and the question is why was it created if it actually increases the complexity in balancing the grid? So what's the logic behind the 15-minute settlement?
I mean, the logic is that as we add more and more renewable resources to the grid, which is of course more and more volatile in terms of production, it has been recognized that having a 1 hour granularity is not enough to actually capture or to actually help balance the grid. And actually, it has been deployed little by little across Europe. And it has been said that having a 15 minutes MTU for balancing will help the grid more than if it were 1 hour. But of course, since we are working in most of the cases with a clearing price model, it means, of course, that the volatility that you have in the quarter of an hour that correspond to an hour, these 4 prices tend to be more volatile than the average of these prices for an hour. So which is actually what the market is currently experiencing. And the fact that this is quite new in the Nordics is also a factor because people need to adapt to it and people need to learn. But the fundamental reason is that having a more granular view is actually better for the network to be balanced and also to procure reserve, actually.
Very clear. And one more question, because in your last slide, you mentioned the concept of active generation, let's say recommended strategy or approach. So could you perhaps elaborate on this one? So what's the role of active generation?
If you place yourself as a balance responsible party, which means that you need to be squared between what you have sold on the market, for example, and what you are actually producing or injecting on the network, I mean, you need to balance all that. And at the end of the day, if you are in balance, then you are exposed to the imbalance prices, which are a bit volatile at the moment, as I said. And you have 2 ways of doing it, right? So, because on the one hand, you have your forecast of production, which tells you, okay, at this quarter of an hour, you will produce on average that much power. And on the other hand, you have your activity on the intraday market. So what you will do is try to actually match your position, so your trading position, to your physical position. So this is the traditional way of balancing yourself. So you use the intraday market to balance your physical position. Of course, the other way of doing it, if it's possible, is to say, okay, I will also try to actually change my production profile. That could be through a battery, going through a battery, in order to match my commercial position. So that's the other way around than the traditional way of balancing your portfolio.
Yeah, very clear. Thank you, Jen. So maybe we can move to Michael and Pratik. So we have a lot of questions, so I'll do my best to try to blend some of them together because they have some points in common. So first of all, is relates to the methodology that you use to build price forecast for ancillary services. Maybe you can tell us if it's Monte Carlo simulation, scenario analysis, whatever. Here, just a comment on the methodology, and related to that, allow me also to throw in a question related to how do you calculate price volatility over time. More
Yeah.
BESS, you would expect indeed less volatility. So generally, maybe a comment on the modeling assumptions behind your forecasts.
Yeah, I'll try to comment on that in a very compact manner. So essentially, the ancillary services and energy price forecast is something that takes a vast amount of our resources. It's managed as a small industrial process in the company. In general, the topic is we've decided many years ago to not go to fundamentals modeling and to do what's referred to as stack model, because we assume that this would, although this provides very good results for marginal price estimation and energy prices, it doesn't really say anything about what's happening between every hour for ancillary services. And since storage, we're making most of the money and still are, I guess, on ancillary services, we decided to go another route. The route we took was machine learning, essentially correlating ancillary services prices in a given country with multiple other factors, and proceeding in two parallel steps. Step one, we have a team of machine learning experts that actually some people we hired from Meta. Basically, what they do is they take a bunch of data in a given country and try to correlate the ancillary services prices with those data and backcast a test year like 2023, and once they have a very good fit to 2023, they freeze the model. Then in parallel to this, we have a team of policy and technical analysts that are looking at European policies, European regulations, and then for each country, we have one person looking at technical regulation in each country in order to provide a scenario, a future scenario for the given country. It's then harmonized by one of our lead consultants. And once everything is harmonized, it's passed on to the machine learning experts. And what the team's machine learning team does is they take the scenarios, they apply their machine learning models to the forward-looking scenarios in order to provide future price curves. Now, to the second question, that doesn't say much about volatility, because if when you're doing machine learning, there's something what never happened in the past, you will not be able to forecast it in the future. And indeed, the one thing that didn't happen in the past, that has a very strong impact on prices, is storage penetration. So essentially, the way this is done is the machine learning team forecasts prices in each country with no additional storage as compared to what is in the market today, and then our for each country, the country responsible, the person responsible for storage in each country, who, because we are one-stop shop experts, we follow very closely the market in each country. We know the transactions. He or she in his or her country corrects, changes the merit order for the country with the vision that he or she has for how fast will storage penetrate, and that in turn has a cannibalizing effect on price, especially on storage, on ancillary services prices in the given country, until we have something that we agree to. Then we freeze it, and this is how our price forecasts are done, taking into account all the past data, our vision for the future, as well as with a kind of uh, decent modeling of price cannibalization and the decrease of volatility due to storage.
Impressive. Along with joke, I think we probably should have a webinar separate just for that, just for the modeling part. But indeed, very impressive. Maybe one question also relates to duration, because we based it on a 2-hour case study here. The question is, if we were to apply longer durations, say 4 or well, maybe here we have a question on 8 or 12 hours, but probably that's a bit on the upside. Let's say 4 hours. Would it be more beneficial for PV plus BESS collocated or for the BESS standalone case in your forecasts?
Pratik, you want to give it a try?
Yeah. So, I mean, internally, we have done that tests, and essentially it doesn't really make sense to increase the duration a whole lot. And the simple reason is because most of the revenues that are being made at the moment and are focused on capacity reservation. So as markets get cannibalized, that dynamic changes a little bit. But for 2027 COD, what we've analyzed, it doesn't make sense to go more than 2 hours.
Okay.
The results
So
are worse.
2 hours, and maybe a final question, then we can wrap it up. I know that the brand is Solarplaza, but the question related also to wind. What if you were to run a simulation on wind plus BESS collocation? Maybe a comment if the results would be perhaps similar or better or worse. And a question also on the forecast that you guys are running. Let's say on the whole ML technique behind it. If today it's actually bankable, is it recognized? How do you? What's the feedback also by your customers today?
Well, so the question is whether, yeah, so I can take the one on bankability. So yeah, we've participated in multiple financing rounds, both equity, debt, non-recourse. I guess the biggest non-recourse one was, I think it was 430 million euros in Finland and France by Santander and Rabobank for
Mhm.
NW Group. So that was non-recourse finance. So yeah, I mean, I guess what we do is bankable, if that's the question. And
Yeah, indeed. And on the final question related to a potential simulation, if you were to let's say run a similar case study, but instead of PV at
with wind, I
with
don't
wind,
know.
you had a
What would we say about wind? I don't know. Do you have any? It probably will end up being the same, because then in the end they compete with the. There's so much money to be earned. I would guess there's so much money to be earned on MFR capacity that you just don't want to disturb your battery. And probably the results with wind, I haven't seen them, and the wind patterns may differ, but I would say they would be worse for hybrid than with solar, because just wind generates more per megawatt and just takes
Mhm.
more space, like more. Just it just occupies the connection more time. But I
More
have
time.
not seen results on that. I don't know if you have, Pratik, but I don't think. Yeah, I don't think we have.
Uh, no, no, but I agree. I think that is what we'll probably see. Just more competition for the grid connection and worse results.
Yeah, very clear. We had a lot of questions, so what we'll do also, maybe a comment to the audience, we'll let you answer them. Maybe perhaps Julien, Mikkel, and Pratik separately via email, because we did have around like 30 questions. So apologies if we couldn't take them all. So first of all, thanks very much for your presentation and insights. I think they're very up to date, because that's what everyone wants to hear in the market nowadays about, right? So, and very helpful. Kind of reminder also for those of you who joined, we have some few upcoming summits, aside from our flagship Nordics one in Copenhagen on September 16th. We're also running Solarplaza Summit Finland PV and Storage on November 13th in Helsinki, and our flagship also European Solarplaza 2 days, Solarplaza Summit Asset Management Europe in Prague. Not anymore Frankfurt as it used to be in previous editions, this time Prague. Much fun, funny I would say, than Frankfurt. So we hope of course to see you there. And yeah, next year also Sweden, third edition. So we're also coming back there. So I would say that said, Julien, Michael, Pratik, thank you very much for today's insights. We will be sharing again the presentation, the recordings via email, and we'll let also the gentleman here revert separately on the questions that were left unanswered during today's webinar. So thanks a lot, gentlemen. And
Thank you,
until the
Thank
next
you.
session, I will
Thank
see
you,
each other in
Solarplaza.
Copenhagen.
Thank you, Nicola.
Thank you for your time. Bye bye. See you guys.
Thank you.
Thank you.
Bye bye.
Bye.